Is the gold rally running out of steam? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hi, Dale. Happy Friday. We made
Hi,
it through another
Maggie.
week.
Yeah, Wild Friday.
It was a wild Friday. Hey to everybody joining us live on Substack and YouTube. As always, drop your questions in and we'll get to as many as we can. So if you were watching today in the U.S. session, it was really a tale of two markets. We started out in record territory, once again rallying higher with U.S. equities, but then we saw the script completely flip in the afternoon. Rising tension between the U.S. and China over tariffs seemed to be the catalyst for the sharp reversal. We saw the NASDAQ, and we'll have to see how we settle here, but the NASDAQ really accelerating into the close, which Dale, you'll talk to me about that, but not a good sign. Down 3.5%, S&P down almost 2.75%, the Dow down 2%. I say that those trade tensions were the catalyst because I suspect there's more to that. But Dale, I do want to point out for everyone who was watching last week, you talked about the VIX sort of maybe being a market tell. It was moving. It didn't seem connected to the rest of the market. It was starting to move higher, even though we were hitting record high after record high.
Right.
Wow. VIX up 33%. We're at 21 right now. What are you thinking as you look at this?
Well, that was a major tell. We started off the show last week. Why are you bearish or still looking for a top in the market? And I said, why isn't the VIX 14? When it was trading 16 and a half, 17. And that was implying to me that there were people buying the VIX. And I also talked about people selling volatility that they could get run over if what I think is going to happen happens. And I guarantee you their short vol positions are having problems because they're not turning the VIX. I said over 18 or 20, 32 was a target. So we still have a way to go. So the VIX was a tell.
Okay,
yeah, now you never know the day because even today, like I'm already short semiconductors. I'm long calls in the triple bearish SOXX. And I thought I was going to have a chance to add on next week if we pushed to one more new high. But I did say last week, don't get FOMO. And is the VIX chart up there?
I'm going to put it up.
Okay.
Sorry. Yeah.
And also talked about that that the way the market was trading, and I'll go to the S&Ps here, and I was talking about how these little days, these dots, were like, I didn't like the action. It felt like it was just levitating, and we had all these tight compressed ranges, and I said, one down day of over 2% or 3% would break trend. Voila, S&P, voila, NASDAQ. So the character of the market has changed. And I said, and it'll probably happen in a day. So, up until 5 hours ago, I thought I was going to come on and talk about how I'm still looking for a high in the S&Ps and NASDAQ and stocks. And really my theme was last week, we talked about the harvest moon. And I said, trim next week, take money off the table. You're not going to go broke taking profits. Be patient. There'll be another buying opportunity. And that was true not only in stocks, but it was very true in crypto. Okay. Last week, I talked about a 3 drive to a top formation. And if you're on my YouTube channel, I had a couple of other shorts this week at 24, looking for 16. We're here. I think eventually Bitcoin's going to trade down towards 100K again. So if you took profits in Bitcoin, you took profits in stocks, you're happy. If you took profits in gold and silver, you're not happy because you're not out at the highs. But I think eventually you will be happy. If you took my advice and hedged your miners, that too was a good idea, because even though gold was exploding, look at what I pointed out, that the gold shares were a tell for me that they were not performing like the gold was. I mean, here's Newmont, right? Sideways grinding, diverging, and here's gold.
Mm.
They look like two different markets. So you may have seen the high in miners, but we could possibly get one more high in gold, maybe up around 4,200 is possible. And silver, maybe 53. But here's another warning and another tell that we're getting close to this. Maybe we've already peaked, and that's a gold silver ratio. So I was looking for a bottom here, and we have lots of divergence here in the gold silver ratio. And I do believe we're bottoming here. I don't think we'll take out 77 and a half. And I am looking for a bear market rally in the gold silver ratio, maybe back to 90 to 95. And it was very good at predicting the rally in metals, because since it topped at 105, silver's outperformed gold, and we had a tremendous move in both. So besides the ratio, it also forecasted direction. So I'm thinking if we're going to get a bounce back in the gold silver ratio, that it's portending highs in metals and underperformance by silver. So,
wow. So these are big
yeah.
changes. And I just want to step back for a second because Brett just said these weekly updates are super helpful. Thank you, Brett. We think so too, because I feel like we always talk about having a toolbox, right? And looking at the charts and like following this price action so closely week to week is a really good sort of one part of a lot of different things. We talk about fundamentals, we talk about narrative, we talk about macro, but this is a really important part. And Christopher said, congratulations are in order for Dale on recent calls on Dixie, Euro currency, crude oil, S&P, a real pro. And you really have been nailing it. So let me ask you this, because I think that on the surface of this, when I'm looking, we'll go back in depth on each of these, I think. So if we look at the S&P, let's start there, because we know from last week that you were a little bit worried you were getting a tell on VIX, and
Right.
you were saying, you were getting nervous, but did you actually put those trades on, or were you waiting for an indication?
Yeah, I bought this early in the week. It's the triple bearish. You know me, I like leverage. So this will go up when semiconductors come down. So it was the most overbought group. So I bought it here around $4, looking for 11. So there's plenty left. I'm still short Uber. I think that NVIDIA top two. So yes, I have some participation on this decline here.
So let me ask you, DD has a great comment in here now, and thank you for this, because I think it's really true. This is kind of like mentally what we all go through. One down day and everyone's a bear now. Could it just be that this is sort of an algo down day? What would you look at, Dale, for sort of an indication that maybe this is something more? And are you saying necessarily that this is the beginning of something big? You tell me. We haven't really covered that yet.
Okay, well, I think we'll go to 6,400 in short order. But viewers will remember how I talked about this throwover line, that it held it here on a break, it held it here. And, this week I was short. I thought I had it. And then we had another run. This time we broke it. So really the sell signal was late in the day if you wanted to be a classic technician. So it's back underneath this rising wedge. Okay, I'll enlarge it so you could see it. So the wedge is anchored all the way back here around 5,800. And now it's back inside the wedge. So now that the wedge is activated again, wedges, rising, falling wedges, can retrace 100% of the move. So I had one anchored here at 6,200 that it's broken, and the larger wedge comes in here at 5,800. So I am looking for more than this just being a one-day wonder or just a dip to buy because you look at the ranges, the whole character of the market change, and there are a lot of people trapped, right? Now, a lot of people that have been getting long for the last month or so. They were on the golf course when this happened, and a lot of people aren't going to react. And I'm sure there's going to be a buy the dip mentality, but I don't think that 5,800 is the end of the world. It's the correction I've been looking for the last month that is finally manifesting here today. And, I'm not looking for the April lows to be taken out, but I think we could see 5,800 and then make our way back up above 7,000. So this is, if you're nimble, you can make money being short, but I think a lot of people should be happy about it and patient that they're going to have better levels to buy everything. I remember being asked last week, the Russell is strong. Should I buy the Russell? And I said, don't get FOMO in Russell. So Russell made one more high this week, but Russell could pull back to 220, 217, and it would just be a correction. But I think we have at the minimum, I said last week, 10 to 15% correction in the market. I said it would start in October. I think it can complete by Thanksgiving or the end of the year. And who knows what it's going to turn into. I mean, it could turn into something bigger than that. But, we'll get a bounce when and if they reopen the government, and when and if I also said that maybe we need the market to sell off for politicians to come to the table and get the government reopened, because their constituents will start looking at their 401k, and that'll make them pick up the phone. And with this new thing with Xi, with China today, with Trump, he doesn't like to see declines in the stock market either. So maybe we'll see another take from him in a week or two. Maybe it's going to take. Maybe it's going to take 10% for him to move.
And that's going to be really interesting to watch, John. I'm glad you brought that up. Again, it's Friday, folks. If you were away from your desk, understandably, there were headlines hitting here in the U.S. that Xi was making moves on exports for rare earth metals. White House that was not well received at the White House. Donald Trump's talking about upping tariffs on China again. This all ahead of this meeting they're supposed to have. So what seemed like good momentum kind of reversed in the headlines today. But Dale, you and I were talking as well, because for some reason it felt like there was more going on to me than just that. And you pointed out that you've been watching credit spreads, right? Is that been another tell for you? What have you been seeing there?
They were widening out pretty good this week before the market caved. So last year everyone wanted junk bonds because they get the higher yield. So here's junk right here. HYG is ETF on junk. Looks a lot like the market, doesn't it? So there's junk, and then here's TLT, and they look like different markets, right? Just like, look at that. So what you have is a flight to quality. Last year, everyone wanted the yield, but you and I were also talking about those bankruptcies that hit, and now there's fear of holding junk and holding lower quality paper, because even the only two companies, you talked about contagion, that a lot of banks are package this paper and they have exposure to this paper.
And
I'm
those
sure it's not
have been hitting. I don't know if you've all been watching, but First Brands, there have been headlines about a division of UBS, which was very exposed to it, much higher than people thought. Yes. In fact, oh dear, the credit spread monster. But these are the kinds of things that start happening in the background that you really want to pay attention to, because when you start getting that with a headline, with the government shutdown, it's rarely just one thing, right? A lot of times it's a culmination of things that sort of sparks that concern about risk and counterparty risk.
Yeah, maybe Trump was a trigger. Trump was a trigger of what was already happening.
Underneath, right? I agree. And by the way, there's exposure in Japan. We don't really know. We're just starting to find out that once again, these bundled loans and divisions sitting under houses of other entities that have exposure. It's not very clear until things start falling apart. So that's a story worth watching, and we will. Dale, question from Daniel on Substack. And hey, Rafa, Jim, Deborah, thanks for joining us. He says, Dale, I'm a fan. I put stops after your Mystic Harvest Moon advice. Curious on your views on tech stocks. If we should expect another leg up after the expected correction. You sort of touched on this a moment ago, but you think there's juice in this downtrend, maybe through the end of the year, and then you're not sure. Then it's unknown to you, right?
Yeah. I mean, let's see what levels it holds, but I wouldn't be looking for a quick snapback in tech. You look at the Mag 7, I'm short semiconductors. So that's really been the leadership in tech. So if I'm right about semiconductors, I don't think that tech is going to come back. Check out this candle in the semiconductors index today. Okay. I think that we could come back eventually, but I'm thinking we could go to 250 in SMH. Okay.
So I've got to think if that happens, that's going to scare some folks.
Yeah, because they weren't hedged going into it, and they were complacent, and they ignored the signs of VIX, and they have FOMO, and they don't want to miss out, and they don't have money management. The people will ride this all the way down. And, one of these days, Maggie, we're not going to have a V. Everything's been a V recovery in the markets. One day it'll be an L. We'll break, and then we'll just move sideways or have, weak recoveries. So, you always have to be on your toes. And, if you're not trying to manage and trim, like after a run like this, I'm sure there are certain stocks that became 5% of your portfolio, like NVIDIA. Or some of these, what are they called? What's coming? Quantum stocks. Yeah. They've gone up 4 or 5-fold. So maybe you have a rule that when a stock becomes more than 3 or 5% of your portfolio, you trim it and rotate, because it's telling you've had a huge move. Maybe it's time to book something.
Yeah. So Daniel, I think that's a great way to, to think about it. Less about, is there another leg up? Maybe there is, but did you take enough profit based on where you're sitting? Maybe that's, key it off your portfolio is a kind of great way to slightly flip that. Freddie had a great comment. My dog walker was telling me to buy AI in gold. But I bring that up because not only is it, when everyone's talking about it, it's always a sign. But I think it's interesting that it was both of those things. So, traditionally we think about gold as the counter to that, right? Like the safe haven too. But there's so much momentum in both of those. Christopher's wondering also about your thoughts on gold. He says a fun-filled week with 20K per contract available trading the swings.
Huge. So, I mean, look at the weekly. It's done nothing wrong. Look at the daily. It's really done nothing wrong. It's challenging the 9-day. We start taking out 39.30, it'll open the door. But like I said early in the show, we have a confirmed high here in the gold. I tried it early in the week at 39.20, and it just blew right through it, took my stops out. So I just gave up the last 3 days of even trying to scalp the short side. And then, we finally had some nice down candles in silver. I'm looking to get short. If I get a rally to 53, I'll try it up there, because the gold silver ratio has peaked. So, it's possible that we still get one more rally. But watch the RSI on the 4-hour. And if we don't get over 70 and we're 200 higher than we are now, I'd be taking some profits, unless it's a physical position and you're going to hold it for forever. Because I still believe you'll be able to buy gold at 3,000 down the road, and I still think you'll be able to buy silver at $40 down the road, maybe
Mm.
38.
Mm.
So I still think that, everything, the air is coming out of everything, and the metals are the last market standing. Crypto caved first. That's one of the reasons. Another tell on the market that I talked about, that Bitcoin wasn't really performing. It got back to the old highs, but didn't take out the old highs, like the S&Ps kept making new highs. So that told me a little something about liquidity too.
Mm.
So, you had the credit spreads widening. I think eventually, if I'm right about 5,800, that there'll be all kinds, there's record margin debt. There'll be all kinds of margin calls, and people have good gains in their gold miners, and maybe their gold futures, and they'll sell what they have, and they'll liquidate it. I think what I said last week was, I don't think it's a good time to be long anything for a while, and I still stand by it. I have more confirmation now than before. And also keep in mind, when you talk about miners, don't forget the second word in it. They're gold stocks. Okay, they're stocks.
Mm.
So they're also more vulnerable to a risk off move than the physical market. So that was another tell, with the miners not making dramatically new highs with the physical.
Mm. So, I mean, it's such a good point because we talk about this all the time, that people will sell what they have gains in. Uh,
Yeah.
so, um, I think this is what Emma's saying too. When the margin call takes hold, people sell good, safe positions to try to avoid bankruptcy, as you need to. Uh, Coach, Mag 7. So we talked about semiconductors. Do you see that as the sort of lead problem area in tech? Let's not even say Mag 7. Let's broaden it out, but you go
No,
where you want.
let's talk Max 7. It's
Okay.
important. So here it is. And I thought I was going to have a chance to sell one more high. I was earlier in the day, I go, oh, I'm getting short once we take out these highs. This top is in too. Okay. I think that there's a chance for the Mag 7s to trade down to, 54, and maybe even see a 40 handle down the road later in the year.
Wow, that's going to be a rough road. So no one breaks through. There's not a breakout tech that seems to have more ability to withstand. You feel like this
Uh,
whole sector goes down.
yeah, I mean, we could take a look at the buy cannabis. It's holding up okay, but I even think that'll sell off. But I go through these every week when I'm on with you guys,
Yep.
and I say they never look that good to me. Here's Amazon
Mm-hmm.
on the
You
verge
have
of
been
a
saying this consistently for a while.
yeah. Apple isn't going to like it if what Trump if he sticks to his guns. We could see 220. And then if we take that out, we have a different market. Look at Meta. It topped a long time ago. So a lot of these Mag 7 stocks have already topped. Google is one of the strongest. It's rolling over. Netflix tried to rally, another failing rally. Microsoft looks like there's another wave coming, maybe to 460. And then NVIDIA gapped up to new highs right here yesterday,
Mm-hmm.
and then put in a very negative day. NVIDIA did not confirm on the daily on that gap up. It barely confirmed on the 4 hour. So I think NVIDIA is top too. Sell rips. And then I brought up Palantir last week saying, that we had made a lower high. It tried to make me look silly this week again, but I think Palantir has some issues under this. And here's Uber, which, I've been waiting for a sell off for a long time in Uber. We're finally breaking trend. I think we could see, the low 80s first, and then eventually I think we're going to see Uber trade even lower than that maybe back down to $50.
So
So I'm pretty bearish.
with all of this bearishness and sort of negative, do you expect when you're seeing this downdraft, are people just going to get out and go to cash? Do they move to bonds, or is this or another? Do we start to see some of the neglected areas of equities do okay, or is this sort of a broad-based sell-off where it's risk off?
When they raid the saloon, they take all the girls. All right. So I think there'll be some that'll hold up better. But I think what we're looking at is a raising cash type of liquidity event. I talked about the repo rate. That's come down a lot. Short-term rates, I may be wrong about the 10-year. I came in last week being pretty bulled up that we were going to break out over 420, and that hasn't happened. Now we're testing major support at four. So the Fed's been doing something because like I said, there's been a lot of dollar demand in the overnight markets between the banks, and the SOFR rate has dropped from 4.7 to 4.2. I think it has to be the Fed that's adding liquidity right now in the overnight markets. So I'm neutral now. I don't know. It could still hold here and head back up, or it could break down. Right now, it's stand aside for me. I'm not sure.
So what I want to circle back to, since we just touched on bonds, and it's, by the way, very interesting, right? That if the Fed is having to step in and provide liquidity, and we have some issues, which people have been pointing out. We also have Besson today saying that they're standing by to provide assistance to Argentina. So yeah. there's a lot going on right now, which some people are wondering about. But the dollar. So I feel like you've been spot on about this right now too. We saw some big moves in currencies. What are you looking at for a dollar?
Well, to me, it looks like a breakout. This is not such a great day, but we'll see if it holds a breakout or not at 98.60. I still think, I'm still going to look to play the long side. Here's the breakout level. So it should hold here at 98.60 or something else that's going on. I still think that the euro, broke this 16.5 level. If it starts to recapture 16.5, maybe something else is going on. Maybe that was it. But I don't think so. I think you could still sell rallies in the dollar. And the one that had been holding up the best really caved, the Aussie dollar, which I'm still looking for about 62 cents in this, and then a major buy. So I'm going to still go with the dollar. One thing that may have changed, at least short term, because of yields, is we had this huge move in the yen because of the election in Japan last weekend.
Yes. Big move in the yen, right?
But today, and I had this line drawn for weeks, and we went up to it. So out of principle, when I get to some of these, I'll try it. So I tried it. It's working a little bit, but there's still a lot of mo in this. So we could see how we were confirming up here, a little divergence. So we could pull back to 150 and then blast again to 154. But eventually, the yen is going to be going, U.S. dollar yen's going to be going up. U.S. dollar yen's going to be going down because of risk off. Mm-hmm. It went up over a political event, but it's going to go down because of risk off. So we'll see.
What about we've been talking about, and yes, Emma, they're buying Argentinian pesos, but Besant made a general comment, as they do, about standing by to provide any kind of financial stability when needed. There's been some concerns about the UK economy too. Are you watching cable at all, Dale, or what are your thoughts on euro? Too. There's a lot of concerns about the French government. I mean, we just have so many pockets of worry. It's kind of amazing that we've been able. It's taken this long to have a bit of a pullback.
Well, I interviewed someone today who lives in Spain, and I asked her. I said, what are the people on the ground saying about Ukraine? And she's saying on television they're talking about raising taxes so that they can build up their defense. And when you talk about problems in Europe, something else we talked about that was going to be the epicenter of the next crisis. And what happens when economies go bad is that nations look for wars. And she said that besides raising taxes, they're talking about it. And I think Europe doesn't want a war, but they think they need a war. And that's part of, eventually in this Euro trade, if I'm right about a continuation move in the dollar to 103 or so, I think we could see 112, maybe 110. So I still think there's plenty of juice left in the dollar trade too. And then we'll take a look at it down there. Maybe that's just a correction, because when you look at the long term, look at this move we had from 102 to almost 120. So just like the market, this could breathe too and trade back down to a weekly moving average, and this would just be a correction. So we could pull back to 110, 112, and then go to 130. So this is a period of having a shopping list, or if you know how to sell rips, you could do okay. Otherwise, you just wait for markets to come in and maybe have completed what you think is going to be most of the correction, and starts giving you tells the other way, like the market making new lows, but the VIX not making new highs. The opposite of what we're seeing here. You look, or credit spread starting to come back in. So you look for those signs. But I think the euro has, and I've said this for a while, for all month or a month and a half since we've been on, that I thought euro could trade down to 110. I think cable could trade under 130, maybe 128. And the Dixie from the lows here on the Fed cut, I thought that we could see 102, 103, which is again a 50% correction of the decline we had since the tariffs.
All right, stuff for us to watch for, and it does seem like we're sort of at a pivot point here, and there's gonna be an awful lot of volatility. It's that time of year, so we'll see how serious it gets.
You know what? Markets are like they're living, so they inhale, which is what we're doing now, and then they exhale, and things blow off. So the market's inhaling right now. So if maybe it'd be easier to just say, oh, it's no big deal. The markets are just inhaling.
Yes, maybe, but we'll see. You gave us all the signs to watch for to see if it turns into something else, because there's no shortage of that for sure. But as always, it's such a pleasure to end the week with you. We love our residency, Dale, and I just want to flag that we just talked about some of the macro overlay that's also, contributing to this. I'm catching up with Grant Williams on Monday for macro sessions. It won't come out Monday. It'll come out, I forget when exactly, but keep an eye out for that. And if you have any questions you want me to ask him, drop us a line, send us a message on Substack, email us, subscribe, talk to us, and I will ask them of him, because he's obviously thinking about all of that type of stuff. And if you are on Substack, we have a fabulous conversation with the Blind Squirrel. If you're not subscribing to his Substack, you should be, but a great conversation. He's our first major note. So kind of more of a personal conversation with him about his journey and some of the sort of big events in his life and lessons he learned. And Dale, do you remember Barings? Do you remember Barings Bank, since we're talking about currency? Yes. It's good to talk to people like
Nick
Dale.
Leeson. Nick Leeson.
That's right. If you're not familiar with them, go do some homework.
I'd like to toast Mr. Moon, the Harvest Moon that gave us these reversals this week. And I'd also like to toast Sir Isaac Newton, because we now know again that gravity exists.
That's right. There's no getting around it.
There's gravity.
I know
Gravity
people
this
are
week.
always really interested when Dale talks about like the moons and the solstices and eclipses. But I've many times met folks that follow charts and are real traders and commodity folks. And to me, it's because you watch patterns. I don't know if that rings true to you, Dale, but
Cycles. Yeah.
yeah,
Yeah.
exactly.
Patterns.
Yeah.
So the
And that moon
hard
was something else the other night.
so you didn't need charts. All you had to do was look up in the sky and you knew what to do.
If only it was that easy. If only
Yeah.
it was that easy. Anyway, great to be with you all. Great to end the week with you. Check out Rupert on Major Notes and message me about Grant. And we will see you all again next time. Have a fantastic weekend, everyone. Take care and good luck out there.
Adios, everyone. Take it easy, Maggie.